This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril in Singapore. The top stories this hour. Asian stocks prime for a positive open as Wall Street gains on hopes the U.S. government shutdown may end on Wednesday. A reopening set to restore access to economic data, clarifying the Fed's rate cut outlook. SoftBank in focus after selling its entire Nvidia stake for almost $6 billion to bankroll AI investments. Also ahead, deadly explosions in the capitals of India and Pakistan raising concern of renewed tensions between the nuclear-armed neighbors.
And I'm Haslinda Amin live at the 10th annual Singapore FinTech Festival, where AI innovation and the latest token technologies are set to take center stage. We'll speak with one of the organizers, GFTN, as well as Visa's Asia-Pac president.
Take a look at how we're setting up for the Asia market session because we had Japanese stocks losing ground in the previous session. The Japanese yen also weakening slightly overnight. We're already at the lowest level since February. And we continue to watch JGBs. Of course, we had the 30-year debt auction drawing the weakest demand since June. There are concerns about those debt risks in Japan, given Prime Minister Takaichi's fiscal policy. We're getting breaking news out of South Korea at the moment as well. We're getting the latest jobs numbers coming in at 2.6%, coming in line with estimates, but rising from the previous month. We have seen some weak hiring in the construction sector that's been pressuring the market, and the recovery has been pretty slow. We have seen 193,000 jobs so added in the month of October from a year earlier. We'll watch the Kospi, of course. We have been watching those tech stocks, the high-flying tech stocks in Japan. We'll be watching SoftBank as well, given that they sold their entire stake in Nvidia, Avril.
Yep. Shery, we also have breaking earnings crossing the terminal. Singtel is, of course, Southeast Asia's largest telco by revenue. First half numbers crossing, and we are seeing first half net income coming in at 3.4 billion Sing dollars. Underlying profit also for first half, 1.35 billion Sing. It has announced that interim dividend per share at just over 8 cents, and it still sees the full year capex at about 2.5 billion Sing dollars. And of course, the overhang for Singtel has been Opta's, given the September outages. It says it's Opta's business still faces uncertainty. Now, let's recap as well what we saw on Wall Street overnight against the backdrop of data from the ADP showing that U.S. companies actually shed jobs in late October. So we did see Treasury futures, of course, bond markets were shut for Veterans Day. Bond futures rose. And on top of that, we also had the dollar index slipping to the lowest in about 2 weeks. It's interesting amid all this, even though we saw Nvidia leading tech Mag 7 specifically on the way down after SoftBank revealed that it sold its entire stake in the chip giant in order to bankroll its AI investments. We actually saw the rest of the market looking fairly resilient. There is that Fed rate cut optimism still, and optimism as well about us potentially seeing a reopening finally of the U.S. government, Shery.
Yeah, let's get more on the market action, especially in the tech space, as you mentioned, of course, SoftBank, Nvidia in focus, and also Wall Street's bets that the longest shutdown in the U.S. is coming to an end. Joining us now is Asia Tech correspondent Annabelle Drewlers and Bloomberg M-Live strategist Mark Cranfield. But let's start with you because, of course, we got the news on SoftBank just after the close, and we have now seen them sell their entire Nvidia stake. Is that AI boom continuing to make news?
Yeah, it's actually not the first time they've done this, selling their Nvidia holdings, but certainly when you've had that extreme run-up in the stock, it's very, very noticeable to the entire market. But as you said, yes, they've offloaded the entire portion of it, so you're making here around $5.8 billion. And the goal of this, and the reason they're doing it, is because they need to bankroll their AI investments. So they've got to be paying for projects like Stargate data centers with OpenAI and Oracle. They've got a robot manufacturing site in the US as well. So big reaction in that share price. We had ADRs to the US listed listing rising more than 7%. Nvidia shares, meanwhile, were under pressure in the session. But it is going to be a really big challenge for the business to keep financing these ongoing goals, and then anything that really comes into founder Masayoshi Son's path over the coming few months, because, of course, there are a lot of initiatives SoftBank is looking at taking on as well. But it is also sort of feeding into that bigger debate that we have in AI now, which is around whether spending from firms like Nvidia, Meta, Alphabet, whether that can actually extend, whether it's sustainable. Are we seeing an AI bubble? But certainly it was a big point of the SoftBank earnings call. We can get more into those numbers in a moment. But a big point of that SoftBank earnings call on Tuesday, because they were asked about the AI bubble, but actually even the CFO of SoftBank declined to say whether we're in a bubble or not.
Which is interesting, right? Let's talk about its OpenAI investments and the extent in which it's expecting it to pay off, because, you know, there are those expectations that it fuels profits.
Yeah, exactly. I mean, when you take a look at essentially the value of its privately held companies in the Vision Fund, I mean, no company stands out more than OpenAI, because this is a company that SoftBank has funneled more than $30 billion into at this point. But yes, that did certainly have a big bearing on the overall earnings for the period, because it was actually a surprisingly strong quarter. So surprise net income of $2.5 trillion. So you're looking at just over $16 billion. The estimate had been for 418 billion. So 2.5 trillion, the estimate for 418 billion yen. According to our Bloomberg intelligence team, that now puts SoftBank on track for its highest annual profit going back to 2020. The company as well also announced a 4-for-1 stock sale split that's set to take place from January of next year. That's an interesting move, a stock split, because of course it makes the stock very palatable to the retail investment crowd, and you could continue to see strong demand from that.
And strong demand also when it comes to those products from AMD. I mean, they're predicting that their growth will continue on that data center build out that we're seeing around the world.
Yeah, exactly, because AMD has actually been one of the beneficiaries out of companies that are essentially looking to divest and reduce their reliance a little bit on Nvidia. So we've seen AMD chips, for instance, being used in major data center build-outs from the likes of Oracle, AMD. So last week we had the earnings, but overnight, or just in the last few hours, we've well had AMD holding a press conference in New York, so getting more on the longer-term outlook for the company as well. So Lisa Su, she essentially outlined the plans for the next coming 3 to 5 years, and her objective or her goal is that the company is going to see annual revenue growth of 35% or more than 35% on average. Data center revenue as well, that's expected to increase by an average of 80% over the period. So again, pointing back to how AMD, it's not just a company that works on PC processors, it's very much got that AI business that's growing as well. So you saw that pop in shares and extended trading up more than 3%. It was again under pressure intraday, but it is a stock price that's more than doubled this year at this point, as the company has signed those deals with the likes of OpenAI and Oracle, and really validated the quality of its products as well.
Belle, thank you so much. Our Asia tech correspondent Annabelle draws for us. Let's get to the other market themes today with Bloomberg M-Life strategist Mark Cranfield. So as Belle was just outlining, Mark, it's really got to do with AI. But what's also remarkable is that if you look at the S&P 500, it's up 2% over the period of the U.S. government shutdown. What does this tell us about the market resilience and the importance of AI as a factor?
Well, people are obviously looking ahead to the fact that once the shutdown is out of the way, the pressure is probably going to come back on the Federal Reserve to lower interest rates. That's really what the market, and it's yesterday in particular, pretty broad move in S&P stocks, which will be reassuring to a lot of people. It wasn't just about the tech sector, there was more going on than that. And we had more private sector data last night saying the jobs market is still very weak in the United States. Well, if the shutdown does finish this week, we're going to get a lot of data, but people will there'll be too much to digest, and most of it will be backward looking. So people will probably say, okay, all I really want to know about what's happening now, how does it affect the Federal Reserve for their December meeting? At the moment, the market is still pricing more in favor of an interest rate cut. You can imagine the pressure is going to come on them pretty hard from external voices to really go for that 25 basis points cut. By the time we get there, it will probably be fully priced into the market. That's going to be the dominant theme. Once the shutdown's out of the way, people will be looking for the Federal Reserve to help out the situation, because the economy has been suffering a bit during this period.
We had thought that perhaps dollar strength had come back, especially with carry trades being profitable. But what are we seeing in terms of expectations of where the greenback goes from here?
Well, the biggest threat to the carry trade really is the euro, and you're beginning to see a bit of traction coming in terms of support for the euro, and that will really change the dynamics completely. So people are already beginning to think that the European Central Bank is on hold in terms of interest rates, and as they look ahead to 2026, there's already some suggestions that the next move from the European Central Bank may need to tighten interest rates, in complete contrast to what the Federal Reserve is doing. Now, it's early stages, but the euro is still up significantly year to date. It's had a pretty good year against the US dollar. The key to the whole idea that there is a US dollar carry trade really depends on whether the euro's next move is 2% higher or 2% lower. And for now, it looks as though traction is building for the dollar to go down, euro to increase, particularly if we do get this reopening and the moves towards lower Fed interest rates come into play. The euro will be the most significant currency in that department, and the yen is a bit on the sidelines, but it will help the yen to some extent. If the euro gets some momentum, the yen will start to turn as well. So the carry trade is beginning to look a bit long in the legs already.
What about the JGB trade? Is that long in the legs on the super long side of things, given how weak the 30-year auction yesterday was?
This is going to turn into a curve trade, really. So Prime Minister Takaichi has said she wants to increase spending. She's got big plans in that department. We saw not a great auction yesterday in the 30-year, but we're still below the year-to-date highs in terms of yields. If she's going to increase supply of bonds, it's mostly going to have to fall in the shorter end of the curve. Probably more exciting will be this week's 5-year JGB auction, because that is the sweet spot in the curve that could take the real brunt of increased issuance in JGBs. 2s, 5s, 10s are probably where the majority of any increase will fall. This week's 5-year could be pretty spicy. People will have a lot of trouble digesting that if they think that there's going to be more supply coming in the next few months. So eventually we're going to see curve flattening with the long end stabilizing 20, 30, 40 years. Those yields have probably seen their peaks already, but there's plenty of room for upside in the shorter durations, especially if we go back to the Bank of Japan. Eventually they're going to have to raise interest rates because the yen is still very weak and inflation is sticky. It's not going down in Japan.
We'll watch the 5-year sale this week. Mark, always insightful. Thank you so much. Bloomberg M-Line strategist Mark Cranfield. Now, coming up on the Asia trade, Singtel CFO joins us to break down their earnings. Plus, we talk market strategy with UBS, and we're live from the Singapore FinTech Festival with GFTN and Visa. Much more ahead. This is Bloomberg.
If the government doesn't open, if the House doesn't do its job, I've had questions about what happens for Thanksgiving. There's a lot of Thanksgiving travel. What's going to happen during that time frame? I'm going to tell you we are not going to get to Thanksgiving.
U.S. Transportation Secretary Sean Duffy speaking at Chicago's International Airport ahead of a House vote on funding to end the U.S. government shutdown. Major delays to U.S. flights are expected to continue for days, even if the House approves the spending measure. Let's bring in Bloomberg Digital Politics editor Romy Verghese. Romy, what are we expecting when it comes to these flight cuts, especially since we should see a government shutdown end very soon?
Yes, we do have a deal to end the shutdown, but it depends on passage of this bill in front of the House, which is expected to occur tomorrow, Wednesday, in U.S. hours. And then, of course, Trump has to sign it. But until then, the government order to reduce flights by 10% by Friday remains in effect. The government says that it's necessary because of safety issues, that air traffic controllers have been calling in sick. There's a shortage. But Sean Duffy, as our viewers just saw, made it clear that there's a political dimension to this too. He says that if the House does not pass this bill, there's going to be massively more disruption. And, we're heading into the all-important Thanksgiving holiday season. So, yes, even if the House passes the legislation on Wednesday, the president signs it, we still could see delays heading into the Thanksgiving holiday weekend.
So how confident are we that we will see flights return to normal ahead of the holiday season?
It's still uncertain as of now, but it is clear that the smaller airlines are going to have more difficulty because they have less flexibility. So far, we've had 9,000 flights canceled. They have been more of the regional lines, not the major lines. So with these 9,000 flights being affected, we are going to see how quickly they can get back up to speed. And the hope is that the larger airlines will have the flexibility within their networks to get back to normal operations.
What are airline executives saying about the government-mandated flight cuts?
Our colleagues exclusively reported that some airline executives expressed some concern about these cuts. They wanted to see the safety data behind this. As I mentioned, the smaller airlines have more difficulty managing these reductions, and they were told clearly this is non-negotiable. These 10% cuts are non-negotiable. This is what the government is saying for them to do. But of course, everyone says safety is the most important thing. We have had some near collisions recently this year, and all the airlines are saying that, yes, safety is of the utmost importance.
Romy, thank you so much. Bloomberg Digital Politics editor Romy Varghese for us there. And of course, amid the shutdown, it's not just about these flight disruptions, it's also the lack of data. Again, we've seen how the dollar has been struggling to rebound. We did see private numbers showing a slowing in the jobs market. We are keeping tabs on dollar. China, of course, at the end of the week, we're going to get that data bonanza. Meantime, China's central bank has dismissed concerns about a slowdown in new loans as the economy shifts away from its old growth drivers following a record contraction in lending earlier this year. Let's bring our China correspondent, Min Min Lo. So, Min Min, it looks like the PBOC is looking to engineer a new normal for credit growth.
That's right. I mean, we have seen credit growth really entering a very weak cycle, and it doesn't seem like officials are in a hurry to reverse that. At least, according to the PBOC, they are saying we can expect credit cycle to be weaker because the economy is transitioning from a high-speed growth model to a high-quality growth model, and also because property is no longer as important a pillar to the country's GDP, because, of course, a big reason why loan growth has been declining is because a lot of the money that people save that used to go into real estate is now going into the capital markets. At the same time, when it comes to industrial activity, because the government has been trying to back this high-quality productive forces, many companies are also now able to tap funding from venture capitals, from the capital markets, the bond market as well. And so that is one reason why corporate loans has also been declining as well. Of course, the economic slowdown is a factor as well, but it seems like the Chinese government is able to tolerate the slowdown in the credit growth, and still the PBOC is saying that they will do what they can to provide guidance to banks to ensure that they continue to provide credit support to the economy and also to keep financing conditions relatively loose.
Yeah, and they're trying to boost private investment, right? The State Council just unveiling a package of measures. What exactly are they trying to do?
Yes, they have unveiled a series of 13 measures, and these are pretty concrete measures that is quite significant because now private companies will be allowed to take at least a 10% stake in certain approved projects in sectors like energy and, for example, nuclear and hydropower plants, electricity as well, railway projects, for example. And other than that, the government is also trying to give more opportunities to small and medium size enterprises. So when it comes to government contracts above a certain size, the government contractors are required to allocate at least 30% of their budgets to small and medium-sized enterprises, and government buyers are encouraged to increase the size of their advance payments to 30% when it comes to payments to private enterprises. So all of these are measures that would make it a more friendly investment environment for private enterprises at a time when we have seen tremendous pullback over the past few years, right? Because of the deflationary environment, you look at the first 9 months of the year, inbound FDI has contracted by about 10%. And so the government clearly taking this seriously, especially because private enterprises also contribute to about 50% of tax revenue and 80% of urban employment as well.
Bloomberg China correspondent Min Lo there with the latest on the economy in China. We have more ahead on the Asia trade. This is Bloomberg. The top global headlines we're following. China's cybersecurity agency has accused the U.S. government of stealing $13 billion worth of Bitcoin. The theft in 2020 was one of the largest crypto heists in history. In a report last week, the Chinese agency says it was probably a state-level hacker operation led by the U.S. Washington has said the tokens are associated with Cambodian businessman Chen Zhi, whom the U.S. has charged with wire fraud and money laundering. Deadly blasts in the capitals of India and Pakistan are raising concern of renewed tensions between the nuclear-armed neighbors. A suicide bomber blew himself up on Tuesday outside a crowded court building in Islamabad that followed Monday's car explosion near New Delhi's historic Red Fort. The Prime Minister's office accuses India of backing terrorist attacks in Pakistan, but India's foreign ministry spokesperson calls the allegations baseless and unfounded. We're following sovereign bonds here across Asia as we had seen Treasury futures gaining ground in the overnight session. Remember, the bond market in the U.S. was closed for Veterans Day, but we had some upside after the ADP research data suggested that the labor market slowed down in the second half of last month. Remember, we're trying to get these private indicators for some ideas of where the U.S. labor economy is going, and this is just another data reference to the narrative of a slowing job market as we are headed towards potentially the end of that longest ever government shutdown, and then we could see some payrolls numbers. Remember, the U.S. September data hasn't come out. The expectation right now, especially from analysts from the likes of Morgan Stanley, saying that we could take about 3 business days to see them. You can see right now the Australia 3-year yield at that 368 level. And Avril, we continue to watch the broader crypto space as well, as I mentioned earlier, given, of course, all of these global risks around currencies and also just a risk on sentiment that we've seen around tech as well.
Yeah, absolutely. I mean, I think this really started off yesterday when SoftBank unveiled that it's exiting Nvidia. So that was seen as a sort of catalyst and prompted de-risking in sentiment. Even in the U.S. session, it wasn't just tech overall. It was also Bitcoin that sold off, and we are seeing the largest cryptocurrency really struggling to recover after this $340 billion wipeout. For the moment, we're seeing it still hovering above the 100,000 level. But as I said, this is really about the absence of risk-taking, I guess, when it comes to some of these assets. Now, coming up, Singapore's largest telco joins us live to discuss their first half results. Singtel CFO Avril joins us next. This is Bloomberg. At the top of the hour, we brought you Singtel earnings for the first half, where net income came in at 3.4 billion Sing dollars. This is versus 1.23 billion Sing on year. Now, Singtel shares are on track for their strongest annual performance in years, driven by growing optimism around its data center business, though investors remain cautious with some concerns over its Australian unit Optus as a probe on its recent service outage is ongoing. Let's discuss all of this and the latest earnings with Singtel Group CFO Arthur Lang. Arthur, really good to see you today. First off, we know how Optus contributes about 50% of Singtel's revenue and EBIT. How have the September outages affected earnings?
Morning, Avril and Shery. Nice to be here. I think to answer your question, Optus does contribute a large portion, almost 50% of our group revenues. But when it comes down to underlying profits, I would say it's slightly less than 10%. So having said that, the incident that happened a few weeks ago is something that we are extremely, regretful, and I think it's created a lot of unhappiness with our customers in Australia, and this is something we're taking very seriously. There's been an independent inquiry panel that has been established. We're letting the Dr. Kerry Scott actually do her independent review and then come up with the findings hopefully by end of this year. And we need to accelerate our transformation initiatives on risk management, process governance, and resilience. So this is something we are very focused on. But if you look at the first half results, I would say it's given. I think we've done pretty okay as a group. It's up. Underlying profits are up about 14% year on year, and it's really driven by the portfolio effect. I mean, in addition to Australia, we have Airtel in India, AIS in Thailand, which have done extremely well, and also our NCS, which is our IT services business. I think you've seen a very nice improvement on EBIT. So despite the uncertainties in Australia, I think we are confident. We definitely have to do something, and we're doing a lot more and really supporting the Optus management and the board in Australia. But as a region and across the portfolio of our businesses, I think we have done, I would say, reasonably well, 14% up in underlying profits.
I guess the drivers of growth are undeniable, but on those uncertainties related to Optus, have you learned anything further about the potential financial penalties that might be imposed either on Singtel or on Optus, and what sort of provisions might you be making for that?
We of course will work very closely with the authorities and the government on that. I think it's too early to discuss and figure out what the actual number is, because there is inquiries that are happening right now. The independent panel is also doing its work, so it's a bit too premature to talk about it. Nevertheless, based on what we have done in the past, not just for Optus but across our businesses, if ever we think that there is some certainty to the penalties and to other types of expenses that are related to the incident, we would definitely take provisions, and we have been fairly conservative on that front. So we have taken what we can and what we need to do at this point in time.
And Arthur, you're trying to position also for data center and the artificial intelligence boom that we're seeing right now. Tell us a little bit about how the STT purchase is going, and what's your competitive edge in an increasingly crowded market?
Shery, thank you for that question. You're right. It's data centers is something that is very pivotal to our transformation strategy. We are in discussions with STT, as you have seen in the press. We're part of a consortium, and it's really in line with what we had said in the past, that we're going to pivot from a communication services heavy business, which is really mobile data and fixed broadband, into digital infrastructure and digital services. So digital infrastructure clearly is one of the biggest contributors to digital infrastructure is our data center business. We have a pretty sizable portfolio and business already, so any acquisitions that we want to look at or we are considering will be very additive to this platform. But we do believe in the demand-supply dynamics here in Asia. Yes, we are going in with our eyes wide open. You are absolutely right. there's actually talk about, whether there is a potential, over demand or over exuberance in this sector. But I think in the markets that we are operating in, there is still real demand for the various services. And our right to play is really, predicated and on the foundation of one, because of our communication services business, because we own in some countries the terrestrial fiber, there is a bit of an end-to-end in terms of providing digital infrastructure services to our customers. We have very strong partnerships across the region, so that positions us quite well.
Given, of course, the concerns that you mentioned about this crowded field, taking on more debt in order to carry out the purchase, it could mean more risks, right? Tell us a little bit about the structure of this deal, because we're hearing about this $5 billion loan that you're in the works with KKR. Is that correct?
Well, again, we cannot comment. It's way too early, Shery. But, you read in the press. But I would say if you look at Singtel's balance sheet, I think it remains quite rock solid. So taking on a bit of debt for an acquisition, to optimize our capital structure, I think it's something that we will do. But nevertheless, we have time and again said that we will always maintain a very strong investment grade rating as a group. Furthermore, I think you have seen our partnership with KKR as a very reliable and strong capital partner. We've done this for our current data center business, where we have brought KKR in to invest 20% in our data center business. If we do look at other opportunities inorganically, we would definitely rely on capital partners like a KKR, because it is a very capital-intensive business. You are absolutely right. So this is one of our ways where we can manage our capital more actively, and at the same time making sure that our funding sources remain liquid and our balance sheet is strong.
Yeah, as part of the capital management process, there's also been that selling in Airtel, right? I wanted also to get your thoughts. Are you looking at perhaps further selling of assets? And on that note, would you consider offloading your Australia unit or exiting the Australia business or Optus, given its long history of troubles?
Okay, yes, we have an active capital management program. We have actually identified a pipeline of $9 billion that we will look to recycle by, let's say, in the medium term, so call it 2030. Out of that $9 billion, we've already achieved $5.6 billion. We have sold, you're right, a small stake in Airtel, in line with what we had said before, that we will look to equalize our stake with our Indian partner. So currently we own 27.5%, having done a small placement just last week. But if you look at this financial year alone, I think if you look at Airtel, while we have placed it out twice, we've only, to put things into perspective, about 2% of Airtel. We still own about 27.5% in Airtel, so a very sizable stake. Now, will we sell Optus and all that? Look, all I can say is we always actively manage our portfolio. Not just Optus. We look at Airtel, we look at AIS, we look at Singtel, we look at Globe, we look at across our portfolio what makes sense in terms of managing our capital effectively to ensure that we have sufficient firepower for growth. If we do look at data centers, that number two, our balance sheet remains rock solid, and number three, we maintain a very healthy return to our shareholders. And by the way, I forgot to mention, this interim dividend, we have increased the dividend further to 8.2 cents. And if I recall, I think it's the highest interim dividend that we have declared ever in Singtel's history. So we are very focused in striking this balance, right? Balance sheet strength, growth opportunities, that we still have funding for growth, and at the same time making sure that our stakeholders and our shareholders get the adequate return on our business.
Arthur Lang, really good to talk to you. So do join us again, Singtel Group CFO, with an update on his business. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how cryptocurrencies are trading at the moment. We're seeing a little bit of a rebound in Bitcoin, but remember, we have seen a failure to continue rallying after the October liquidation event and that downside pressure. It's a really fragile state for the cryptocurrency. Bitcoin rose above 107,000 on the Monday session, but then fell back below 105, and you can see right now at around that $103,000 level, still below its 200-day moving average. But let's discuss what's happening in this space and go to Singapore's 10th annual fintech festival beginning today, bringing together investors, regulators, industry leaders. Bloomberg Insight anchor Hazinda Amin is there and standing by with our next guest, Has.
Hey, Shery, good morning. Lots of questions about Singapore as a crypto hub. Let's get perspective. Sopnendu Mohanty, Group CEO of Global Finance and Technology Network, is with us. So I'm going to have you with us. I mean, lots of questions about Singapore as a crypto hub and lots of questions about the tightening rules on offshore crypto companies. Some say perhaps, you know what, Singapore is being brutal. This is crypto clampdown.
Well, I would not put that way. I think we have been more tighter on the bad actors. Definitely consumer protection is a big issue for all of us. I think what Singapore is doing to me is a right balance because we are focused on the right direction of crypto world, which is stable coin, tokenization, but this is definitely off the table.
Is Singapore paying the price for that move? I mean, we've seen a lot of crypto companies moving to Hong Kong, to the UAE. Is Singapore pivoting and that's costing it its position?
I think if I look at data, it's not that bad. There are some flight out of Singapore, but look at the Singapore FinTech Festival who are here. So definitely there is an exit of actors who don't find it comfortable. But to me, on balance, great place to be Singapore. If you are in responsible innovation, be in Singapore.
But it is a balancing act, right?
Yes, absolutely.
Innovation as well as stability. How do you weigh that?
End of the day, let's put all this out. End of the day, consumer has to have a use case. There has to be a use case for consumer to use crypto. And if we find the right use case, which we are doing, if you look at all our projects announced recently, there is a use case. There's a cross-border payment. There is a real use case for transaction. If that is driven by a crypto design, why not? Go for it, which is happening in Singapore and many other parts.
Blockchain, front and center, everybody's excited about it. And Singapore is at the forefront. Yet, when you take a look at the initiatives in Singapore, they're still at the pilot stage. Why is that? Why is there no scale as yet?
It's a complex technology. It needs certain thought process. Project Guardian is working on GL1, MAS own initiative is working on making it easier. I think the rise of stablecoin will drive interoperability. It will force this design thinking of having all the different blockchain talking to each other. I don't envisage a single blockchain standard. Multiple blockchain interoperable will be the way to go forward. Again, I go back to the point. Use case. What is the use case? Why do you need a blockchain-based financial transaction if there is no real value against what we have today? So cross-border payment will drive that.
When might that happen?
It's already happening. Look at the data. Look at the cross-border transfers in the stablecoin space in the emerging market, south to south. It is actually hitting $1 trillion transactions. It is happening. So I think there's an inflection point, a tipping point. You will see that growing.
Can we get to the tipping point faster if you get regional coordination?
I think, ideally, yes. But consumers' behavior was always dominant the adoption. If you get consumer driving that outcome, you don't have to wait for a regional collaboration in this space. Of course, always welcome.
But where are the conversations right now? How is Singapore looking at it?
Today, we are looking at all the projects. We're looking at all the buyers and sellers who are going to use this platform to transact. I was in Hong Kong. I was in China. I see all these things happening. There is a real movement of moving transaction to the blockchain using stablecoin.
You talk about stablecoin, mainly USD-backed.
Yes.
Is there a case for an SGD-backed stablecoin?
It's always that. I thought somebody's announced, Coinbase, I guess, announced it recently.
The question is demand, right?
Yeah, demand. And I think most of the role Singapore stablecoin will play as an exchange currency against other stablecoin. Same for Hong Kong, same for Singapore. More transaction, more trade flows will drive more adoption.
Yeah, but the question is, when will we see that SGD-backed stablecoin that will create an impact? The top 20 stablecoins are USD.
It is still the demand because accessing US dollar, US asset is the stablecoin's biggest demand. It will take time, but I don't see that long. Maybe a couple of years, you will see a strong other currency picking up. Japanese yen, we saw FSA announcing through one of the pilot project of 3 major Japanese banks issuing yen stablecoin. This is a very good progress. You must give a credit to all the regulators really helping to build the right framework.
I want to touch on cryptocurrencies and I guess a policy out of the U.S. It does seem like under the Trump administration, the U.S. is embracing crypto in a huge way. Some like the EU have come out to say they're concerned about financial stability. Is there a reason to be concerned about that?
No. Because what U.S. is doing, man, it's an interesting name. First, they had a Genius Act, then they had a Clarity Act, which I think they're clarifying a lot of things. So there could be a bit of a time to digest. But what U.S. has done, they definitely laid a framework for all regulators around the world to find a common ground. I think that's in some sense a positive. Some sense it will cause reaction. There'll be need to digest all these changes. But I think end of the day, there will be a common ground for all of us.
Where might the concern be? Where might the risks be? Could the EU be right at some point?
Sovereign risk. That's all of the concern. And then, of course, there's a currency risk there. Again, we've got to be very careful about what is the real value of this asset? What backs this asset? The fundamental question is always out there.
And Singapore's take on it? Is Singapore concerned about financial stability on the back of that?
Of course. That's always a concern. Because you've got to ensure these assets are real. It cannot be some program asset nobody knows.
So you're announcing a fund today.
Yes,
Tell us more about it.
I'm quite excited. This is a fund to be announced in partnership with SBI Holdings. We'll also do with Axion. The fund size may not be that big, but it'll get bigger as we go forward.
What is the size?
With the SBI Holding, we are doing 200 million US, but other one will be similar one, hopefully. But it'll grow very fast. We are a strategic investor. We'll do much better.
Okay, let's leave it there. Sop, thanks so much. Sopnendu Mohanty, Group CEO of global advisory firm Global Finance and Technology Network. Avril, heading back to you.
Has, good stuff. Thanks so much. Our Bloomberg co-anchor has Linda Amin in Singapore. And we have more from the Singapore FinTech Festival coming up. Visa tells us their approach to building trust in AI-powered autonomous payments. Stripe will be on the China show to unpack the outlook for stablecoins in Asia. And Citi Institute weighs in on the key catalysts driving the future of finance. This is Bloomberg. Taking a look at currencies as we see the dollar kind of struggling to rebound. At the weakest in about 2 weeks is the Bloomberg Dollar Index. And we are also keeping watch, as I said earlier, on dollar China since learning that Goldman has pushed back its China rate cut forecast by a quarter. And it now sees China delivering cuts to its policy rate, RRR, in the first quarter. And of course, when it comes to the greenback, it's about the U.S. government shutdown, the carry trade as well. Our chief correspondent for FX and rates in Asia, Ruth Carson, is with us in the studio. Ruth, good to see you. Talk to us about what's at play for the dollar and what the drivers, particularly from the shutdown in the Fed, are going to look like.
Absolutely. Now, we have to remember this is a $9.6 trillion a day market, of which the dollar is about 80% on all trades. So, yes, a lot of focus on what exactly is happening with the greenback. Now, a number of things. Definitely the government shutdown weighing here. People are positioning somewhat lightly because we have to remember that investors have been starved of official data now for weeks, for months. So how do you position on the dollar in that case? And often it is a case of positioning incredibly lightly, which is why we're seeing dollar yen, for example, one of the most liquid pairs, going between 152 to 155 on any given day. Euro dollar as well, and definitely CNH and the other Asian currencies as well.
Yeah, we thought perhaps it was the end of the carry trade, but perhaps it has another leg up. Tell us a little bit more about what's happening here in Japan, because we have continued to see the pressure on JGBs as well.
Absolutely. We saw the 30-year auction results as well. Bid to cover ratio was lower. And again, this is very much a macro story. Japan's markets, whether it's stocks, bonds or currencies, are very much in focus. They are some of the most liquid in the world, particularly in Asia, and freely traded. On the JGB side, it's the similar story that we've heard before, which is what is Takaichi doing when it comes to fiscal policy? Is long bond issuance going to rise? Are investors, worried about the interest rate outlook for Japan and the Bank of Japan hiking rates quickly enough, to reflect what's happening there in the economy? And we've seen it. We've seen it yesterday in yesterday's results. There are pressure points. Long bonds are coming under scrutiny again there in Japan. And yes, that pressure is like to persist into 2026.
I mean, you alluded to some of this earlier, Ruth, in that on the other side of the trade with the dollar is the yen. How are you seeing the interplay of treasuries and the greenback into the end of the year?
Absolutely. So we know that interest rate differentials are incredibly important for currency markets and how investors see it. Definitely the case in Japan, definitely the case with dollar yen. We have to look at the interplay between treasury yields, where they are and where they're headed, as well as dollar yen, because they kind of drive each other sometimes as well, particularly during the liquid Asian trading day. So where is dollar yen at the moment? Around 154. Again, multiple things at play here. Investors in the US, particularly on the rate side, are going, how do we bet on treasuries given the dearth of data? So when there is an reopening of the US government, we're going to see a lot more clarity, and that will drive dollar yen as well.
When it comes to rate differentials, when are we going to get that rate hike here in Japan by the Bank of Japan?
Isn't that the $1 trillion question? So one way to look at it would be to actually go to the WIRP function that we have on the terminal. And it's fascinating because I was actually talking to a trader about it this morning. Where are rate bets now? It's less than 50% of a chance for the Bank of Japan to hike by the end of this year. Now, if you actually look back this time, last month, a month ago, it was actually, 50 to 60%. So definitely the interplay here of what's happening with Takaichi's plans, what's happening with bond supply, what's happening when it comes to Japan's fiscal plans, weighing on expectations of rate hikes by the BOJ.
Bloomberg's chief correspondent for FX rates in Asia, Ruth Carson. Good to have you with us. Take a look at how we're trading early in the Asia session as we await the market opens in Japan. We have seen a little bit of pressure on the Japanese yen, still trading at the weakest level since February. And as we mentioned, do watch out for those JGBs on tepid demand for those auctions. But also PIMCO saying the 30-year JGB yields could fall back below 3% next year on that rate gap, Avril.
Yep, and we also have a big interview coming up on Bloomberg later today. Bank of Korea Governor Ri Chang-yong speaks exclusively to us. Catch that conversation on Insight with Haslinda Amin. Markets open in Seoul and Tokyo next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. After risk-on rally in the overnight session on Wall Street, Avril, we are expected to see the end of the longest government shutdown in the United States. We could be setting up for modest gains in Asia.
And on top of that, we did get those private numbers, ADP showing the slowing in the U.S. labor market. Yes, it is private. Yes, this is one data point, but that has been playing out in the markets already, Shery.
Yeah, expectations of the Fed will need to cut rates in order to support the economy. We are going to get the September payrolls numbers perhaps about 3 business days after the reopen of the government as it happened back in the 2013 shutdown. But look at how we're setting up for Asia, because we had those losses for the Nikkei in the previous session. We had losses for the Japanese yen in the overnight session. We are at around February lows when it comes to the Japanese currency. You can see the Nikkei right now as it opens up 0.3%. We continue to watch, of course, the fiscal spending concerns and that pressure on long JGBs, the 10-year yield holding at the 168 level. Take a look at, of course, what's happening at SoftBank at the open as well, because they unloaded all of their stakes in Nvidia. They pocketed almost $6 billion, and that really to help power their investments into artificial intelligence. Take a look at how the Kospi is also coming online in South Korea, because we had seen gains for the last 2 sessions sessions. We are watching those tech stocks as well in the Korean market, especially with the sell-off on high-flying SK Hynix, really propelling that weakness on the Korean won as well, which is holding at that 1462 level. You can see a little bit of downside pressure in the previous session, which led the declines across Asian currencies. And this all coming at a time when we're watching the broader economy as well, the jobless rate rising to 2.6%. We continue to see weak hiring in the construction sector in South Korea.
Yeah, and on top of that, some of the selling in the chip-related stocks, perhaps also adding to that pressure on the local currency. Let's take a look at how U.S. assets are faring. Of course, we had bond market shut for Veterans Day. Already we saw Treasury futures rising, and for the moment, you are seeing those continued gains in Treasuries moving towards the 407 level on the yield on the 10-year, about a 5 basis point move. On the 2-year, roughly 4 basis point move. It's those continued bets coalescing on us getting a rate cut from the Fed come December. Of course, it's gone from a coin toss that was the bet earlier in the week to just over 60% now that markets are anticipating that continued lowering of rates by the U.S. Central Bank. You talked about how it was risk off overnight in the U.S. For the moment, we are seeing futures looking pretty flat, Shery.
Yeah, let's bring in Qiao, financial advisor and managing director at UBS. As we're seeing Treasury yields right now dropping, cash trading resuming after the holidays. As Avril just mentioned, of course, it was Veterans Day. But Shi, good to have you with us. We are expecting that end of the government shutdown in the United States. More data, hopefully, on the state of the U.S. economy. What are the implications across Asia as we head towards potentially more Fed rate cuts?
Yeah, I mean, this is it's a very good day today. Hopefully, the government shutdown is over, and equity rally should continue. We feel strong about the market still, and we feel that a lot of the market will continue to drive up as especially key drivers, additional the rate cuts as. You mentioned the robust corporate earnings providing fundamental support and just growing AI spending in general. So and of course, the continued robust growth in the U.S. And the valuations are looking good in Asia and also international. So we hope this global AI spending will continue to push markets higher.
And which markets will benefit the most? It seems these days the biggest two narratives are Fed rate policy at the moment and the tech rally that we continue to see.
Right, exactly. I think U.S., of course, still the mega caps, a lot of the large tech companies, but we actually find China very attractive at this point, specifically China's tech sector. And that's expected to deliver high single-digit returns over the next 12 months. And a lot of that's supported, again, by the AI adoption, just chip localization in China, and just in general, the earnings growth is very strong in Chinese equities. So that's definitely an area that investors can look into outside of the U.S. European equities is also improving earnings, reasonable valuations, and again, supported by global policies. So I would say, China, Europe are some of our main sectors outside of the U.S.
Just on Chinese tech, it's become a bit of a crowded trade after the rally. How diversified, or how should you be positioned perhaps to hedge against some of that?
Yeah, and that's a great question. I think really the hedging would be not just on the tech sector, but on the general markets, because we do feel like there's still a lot of risk with the markets, especially geopolitical risk, volatility, and also just and hopefully rates does go down as is expected. So a lot of the hedging could just be, one of the asset classes that we like is gold. Gold prices can continue to climb further, and the recent pullback in gold, we feel that's just a pause in this ongoing bull run. So I think think, you can still maintain cash on the sides or maintain fixed income, but it's, the payout on that, especially yields, are going to get lower. But if you can lock in higher yields with fixed income right now, that's probably another asset class that's probably more stable. But gold would be a good hedge at this point if you're going to look outside of the equity markets.
How are you viewing EMs overall, given the expectations of these Fed rate cuts and the dollar having struggled to rebound so far?
Right, and that's a good point. And it's especially, with the geopolitical risk and volatility, we recommend increasing tactical exposure to emerging market equities, and specifically, as I was mentioning, China, and also diversifying out of China, India, Brazil, Indonesia. These are markets with strong natural resources as well, which also drives into our themes of AI, power, resources, energy efficiency. I think EM has not been a market that has been a focus, and this is a really good time to start adding tactical exposure to emerging markets.
It's been interesting, the resilience that we've seen in emerging markets, especially when advanced economies are really dealing with the concerns around their debt loads. You mentioned European equities and some opportunities there. What I'm watching here in Japan is also how JGBs are under pressure because the demand looks pretty tepid on those fiscal concerns. What are some of the big trends there that you're watching?
I think some of the bigger trends, and this is a great point, especially for emerging markets and Japan, as you mentioned, are just kind of benefiting from the structure and the cyclical drivers, including policy support. How strong is the policy support for innovation and just technological self-sufficiency? So again, we feel that these emerging market regions are getting a lot of support, and they do want to become technological self-sufficient. So the overall theme is there to drive growth in those markets.
We saw the ADP numbers coming out this week. So investors have kind of been relying on private data. What is your sense of, before we get to the December decision from the Fed, the extent in which we will have data that would support a rate cut?
Yeah, I think we're most concerned with just kind of the overall economy and the health of the economy. And while the data is important, but we really feel like the Fed has resumed the rate cutting cycle, and it's going to be still driven by a lot of concerns, and especially concerns over a softening labor market. So we're not too concerned with the rate cut, and expecting probably another 50-75 basis points through the first quarter of 2026.
All right, Qiao, thank you so much. Qiao is Managing Director at UBS. Good to chat. Now, as we've been covering this AI rally, let's take a look at how SoftBank is faring as well, because yesterday, after it revealed that it has offloaded its Nvidia stake, that really prompted this de-risking in tech. And, it also trickled through into some of the riskier parts of the market, including cryptocurrencies. SoftBank itself down more than 3% after its second quarter earnings. For more on SoftBank's outlook, let's bring in Asia tech correspondent Annabelle Jobless for us. So, Belle, break things down for us.
Yeah, it could be seen as a bit of a surprise, maybe, just given that you're seeing in the early moments of SoftBank trading, you've seen a drop of as much as 10% just in the first couple of minutes. When you contrast that to what you had for ADRs overnight, which was a surge of more than 7%. So it's clearly not that reaction that you saw flowing across. Just thinking about what it could be so far, there has been something that's been indicated by analysts like those at Smart Karma, for instance, who are saying that given you've seen such a surge in the share price over this year, there could be opening up to profit taking, essentially. So that is perhaps what is playing into the dynamic so far, just investors looking again to take advantage, essentially, of that big surge that we've seen. But in terms of the earnings, to recap on that front as well, because it was a surprisingly strong quarter for the business. You saw net income coming in at 2.5 trillion yen. That's around $16.2 billion in the fiscal second quarter. The average analyst estimate on Wall Street was for 418.2 billion yen. So 418.2 billion yen. It actually came in at 2.5 trillion yen instead. So we are now looking, according to our Bloomberg intelligence team, at the highest annual profit going back to 2020. Something else that played into the dynamics as well, it's going to be interesting to watch, is this stock split that was announced. So a 4-for-1 stock split taking place or starting from January 1st of next year. Again, that opens the stock up more to retail investors, again, after these huge gains, around 150% year to date. So yes, early moments of trading for SoftBank. We're under pressure so far.
Tell us a little bit more about that offloading of Nvidia stakes, because Masayoshi Son seems to be really doubling down on his AI bet.
Yeah, exactly. And this is obviously an interesting point. I mean, they're really continuing to make these forays into the AI space. They're involved, for instance, in the Stargate data centers with OpenAI and Oracle. They're also got their robot manufacturing sites that they're building out in the US, but they do need to finance these initiatives as well. And so the company overnight announced that it had sold its entire stake in Nvidia. That nets about $5.83 billion for the company. It is certainly going to be a challenge, though, for the company to continue financing all of these different AI projects if founder Masayoshi Son continues to take on any new initiatives in the coming months. But it does as well play into that broader theme and that broader question we have. Is there a debate about whether you've got such extensive spending on AI? Is it starting to look like a bubble? But that was as well something that played into the earnings call, because we had executives who were asked about this. Are we at risk of essentially too much hype in the industry? But even the CFO of the company of SoftBank sidestepped that question and declined to say whether we're in an AI bubble or not. But that has been, of course, very significant overnight for the business as well, offloading that Nvidia stake to try and finance its AI bets as well.
Bell, is also going to be interesting as we watch Hon Hai earnings that are due, whether the plateauing smartphone market is going to be offsetting what we're seeing in AI.
Yeah, there's really two key parts of the business for Hon Hai or Foxconn. It is, I mean, there's the AI server side, and this has been really the key growth driver for the business. So, for instance, our Bloomberg intelligence team is looking at AI server revenue to grow 170%. This has been really one of the key beneficiaries. Nvidia has become one of the biggest customers for the company as well. But overall, for the earnings later today, you're looking at just single-digit profit growth, so around 3.3% in net income is the expectation here. That does, as you say, point back to the sort of bread and butter and the original part of the business, which is electronics assembly on a major scale. Foxconn or Hon Hai is the biggest assembler for Apple, and just overnight we actually had some reporting from the information saying that shares or sales of the next iPhone Air are going to be delayed due to current weakness in iPhone sales in that segment as well.
Asia Tech correspondent Annabelle Jewelers there. We have more ahead on the Asia trade. This is Bloomberg. JD.com says orders during this year's Singles' Day shopping festival jumped nearly 60% from last year, including a surge in overseas sales. Let's bring in our China correspondent, Min Min Lo. So some positive signs from JD sales numbers, especially reflecting perhaps the broader economy?
Yeah, definitely. Very strong sales. In fact, record numbers. We're seeing 60% increase in the number of orders and 100% increase in certain overseas markets, including Singapore, Malaysia, South Korea, Japan, Australia, Thailand. They also saw triple the amount of sales in 13 foreign markets where they provide free delivery. But this also masks the numbers for the domestic market a little bit. We can't tell exactly how much is the increase in the domestic sales market market. You can see 40% increase in shoppers as well. But certainly the overseas push really helping to lift its overall numbers this year. We're still waiting for numbers from Alibaba. Their sales has been extended until the end of the week, so November 14. So we don't have the numbers just yet. We have numbers from Xiaomi, though, saying that they got sales of more than $4 billion. And this is also the same thing as what Alibaba told us in the initial numbers. The first 2 hours of this shopping holiday season, they said that among the top selling items are consumer electronics, including Apple's iPhones and Xiaomi's phones. The Xiaomi 17 and Apple iPhone 17 are among the top selling items. But the competition has been intense. Alibaba's Tmall touting 15% discount, and they provided 50 billion yuan in consumer vouchers to their paying customers, the 88 VIP program, which are the high value spenders. And so that is the highest ever allocation of vouchers to this shopping festival ever. And that really shows you the competition that is heating up between all the delivery platforms.
On top of what Singles Day is telling us about the Chinese economy, we're seeing lingering concerns about the slowdown in loan growth as well. The PBOC has been dismissing some of these concerns.
Yes, the PBOC released its third quarter monetary policy report, and it really gives us some signal about how the PBOC is thinking about monetary policy going forward. And based on the report, Goldman Sachs is saying that they are pushing back their forecast of the PBOC's RRR and interest rate cuts by another quarter to the first quarter of next year. And that's because the PBOC has been downplaying the weakness in the credit cycle so far and saying that that is to be expected given that China is going through this transition in its economy from high-speed growth to high-quality growth. And we are also seeing the decline of the property sector, and the government is kind of wanting to minimize or diminish the importance of that pillar to the economy as well. And they do want to move away from the debt-driven growth of yesteryears, right? And they are promoting the high-quality productive forces, and that means that companies, aside from tapping on loans, they can also tap on venture capitals, the capital market, so that contributed to the weaker loan growth. And it supports the argument that with the PBOC resuming bond purchases in recent months as well, perhaps that reduces the urgency for them to loosen monetary policy further.
Min Min, thank you so much. Bloomberg's China correspondent Min Min Lo. Now turning to another top story we're tracking, deadly blasts in the capitals of India and Pakistan are raising concern of renewed tensions between the nuclear-armed neighbors. A suicide bomber blew himself up on Tuesday outside a crowded court building in Islamabad, and that followed Monday's car explosion near New Delhi's historic Red Fort. Let's bring in Bloomberg's chief Asia correspondent Rosalind Matheson for us. Ross, this is quite a turn of events after already that flare up earlier in the year with the border clashes between India and Pakistan. Put things in perspective for us with these latest incidents this week.
Well, as you say, they've come very close together. We don't know if there's any connection between them. And in India, authorities are being very careful about that car explosion, saying they're still investigating the cause. No one seems to have claimed responsibility. We do know the anti-terrorism unit is looking at it, though. But the fact they've come together, and Pakistan, with this explosion in Islamabad, came out very quickly to accuse India overnight, to point the finger. So that just risks those tensions, as you say, rising again. And obviously, very fresh in minds is what happened just some months ago, those direct confrontations between India and Pakistan. The question is, what's going on behind the scenes, if anything, in the diplomatic front to try and avoid, a resumption of direct hostilities?
Is there anything that can break the tension at this point? Any mediators out there? Remember last time we had President Trump claiming that he actually mediated these negotiations for peace.
Well, that's right. So it'll be very interesting to see what the US has to say about this and what China, if anything, has to do about this, because, of course, China has, supported Pakistan previously, including supplying them with military equipment. And no one really has a strong interest in seeing this escalate further. Again, very much the memories of what happened just some months ago. And Donald Trump, of course, claimed that he personally helped bring a truce between India and Pakistan. And that claim, in fact, caused some tensions between the US and India. India. Does Donald Trump come in again? The US obviously has no desire to see this escalate, and Donald Trump, for his own prestige, probably doesn't want to see that happen. And again, India has been quite cautious here. As we said, there's still a lot we don't know. We don't know the cause of the explosion, the car explosion in New Delhi. And so, for now at least, it doesn't seem as though it's going to escalate.
Bloomberg's Chief Asia Correspondent Rosalind Mathieson there with the latest on those escalating tensions between India and Pakistan. We have more ahead on the Asia trade. This is Bloomberg.
Singtel expects to book a higher operating profit for the full year after posting strong results in the first half. The group CFO Arthur Lang told us it's too early to figure out the amount of any penalties following the recent outages at its Australian unit Optus.
Optus does contribute a large portion, almost 50% of our group revenues. But when it comes down to underlying profits, I would say it's slightly less than 10%. So having said that, the incident that happened a few weeks ago is something that we are extremely, regretful, and I think it's created a lot of unhappiness with our customers in Australia, and this is something we're taking very seriously. There's been an independent inquiry panel that has been established. We're letting the Dr. Kerry Scott actually do her independent review and then come up with the findings hopefully by end of this year. And we need to accelerate our transformation initiatives on risk management, process governance, and resilience. So this is something we are very focused on. But if you look at the first half results, I would say it's given. I think we've done pretty okay as a group. It's up. Underlying profits are up about 14% year on year, and it's really driven by the portfolio effect. I mean, in addition to Australia, we have Airtel in India, AIS in Thailand, which have done extremely well, and also our NCS, which is our IT services business. I think you've seen a very nice improvement on EBIT. So despite the uncertainties in Australia, I think we are confident. We definitely have to do something, and we're doing a lot more and really supporting the Optus management and the board in Australia. But as a region and across the portfolio of our businesses, I think we have done, I would say, reasonably well, 14% up in underlying profits.
I guess the drivers of growth are undeniable, but on those uncertainties related to Optus, have you learned anything further about the potential financial penalties that might be imposed either on Singtel or on Optus, and what sort of provisions might you be making for that?
We of course will work very closely with the authorities and the government on that. I think it's too early to discuss and figure out what the actual number is, because there is inquiries that are happening right now. The independent panel is also doing its work, so it's a bit too premature to talk about it. Nevertheless, based on what we have done in the past, not just for Optus but across our businesses, if ever we think that there is some certainty to the penalties and to other types of expenses that are related to the incident, we would definitely take provisions, and we have been fairly conservative on that front. So we have taken what we can and what we need to do at this point in time.
Singtel Group CFO Arthur Lang speaking to us earlier. We have more ahead on the Asia trade. This is Bloomberg.
We are half an hour into the session. Let's take a look at how the benchmarks across Asia are doing. The Nikkei is looking pretty tepid. The big drag is SoftBank, which at one point fell as much as 10%. The rest of the market is actually doing not that poorly. Kospi seeing slight gains, but of course we are tracking the dollar as well. And all this following on from some private numbers out of the US showing that slowing in the labor market there. Let's bring in our chief correspondent for FX and rates in Asia, Ruth Carson. Ruth, we are seeing the concern still about the labor market in the US at a time when we are in a bit of a data black hole, but maybe the shutdown gives us a bit more clarity. What are you seeing in terms of the dollar drivers into the first quarter of next year?
Yeah, it's a great question, and the dollar is very much in focus here because it drives so much of global trade. We know that 80% of every trade in a $9.6 trillion a day currency market involves the dollar. So you're absolutely right. We are still in a shutdown mode, which means all the official data that macro traders really depend on, it's their lifeblood, has been taken away. So very much so, the focus is on the private data that we're seeing, and any hint of softness, particularly in the labour market, is seen as, adding to reinforcing the idea of Fed rate cuts. That typically is, lower yields may not be great for the dollar, but that said, do remember that the dollar also gets a bit of a haven bid. So yes, you're seeing a bit of a cocktail here. On one day, you could see the dollar getting bid, on another, less so, depending on the, the currents of global macro.
I wondered also, because it's been interesting even without the data, or probably because of the lack of data, we've been seeing low volatility in FX overall, which is interesting to see. But what is your sense of whether the trajectory overall for the greenback is one of weakness?
Yeah, and it's very interesting. If you had asked me this question about 6 months ago, I will tell you that the debasement trade and the sell America trade, sell the dollar trade, was in full swing. You could not find a dollar bull anywhere. Now, speaking to people in markets day in, day out, there is a shift in the sands. More and more people are turning neutral, perhaps even long on the dollar. A lot of the Asian desks here as well are now thinking, is the dollar oversold? So going into Q1, going into Q2, even with the Fed cutting, if the world economy is not doing as good as the US, absolutely we're going to be able to see more dollar strength.
What does that mean for the Japanese yen?
Yes, one of the most liquid pairs in the currency market, and the one that has caught so many people off guard this year. So many people have bought the yen against the dollar only to be burnt time and time again. I think the trading action speaks for itself. If you look at where dollar yen is at the moment, any day is between 153 and 155. Now remember, when the carry trade meltdown happened August last year, it was 161. So we're not that far off. So is the yen cheap? On paper, absolutely. But talk to investors out in the market and they'll say, ooh, going on a long position on the yen here, you really have to be brave.
Bloomberg chief correspondent for FX rates in Asia, Ruth Carson, of course, as we continue to hold at around the 154 yen against the dollar. At the same time, we are watching those gold price moves holding above 4,100. Of course, all to do with currencies. We're watching the dollar, investors weighing those moves in the greenback, wider markets with the government shutdown nearing an end as well. For more on what's driving gold, let's bring in our managing editor for commodities and energy in Asia, Clara Ferreira Marquez. Clara, where are we going with the bullion right now?
I think you heard a lot from Ruth that is very similar to the gold market. We're really in a wait and see. We're waiting for all this data that's going to hit the market. So this morning, what people are really weighing up is some of that jobs data, the likelihood of the shutdown, all the impact that this is having on the dollar. So you're seeing gold holding quite nicely above 4,100. However, what people are really waiting for is this deluge of data, all this information that has been held back and forced traders to rely on private data. The expectation, of course, in gold markets at least, is that this will lead to a rate cut and that could push prices a little bit higher. That's really what's sustaining it today. But a lot of different things being weighed up this morning.
What is the risk of reversal in the climb in the precious metal once we do get this deluge of data?
I mean, that risk is there. It's been an extraordinary year to hold for gold. I think it bears remembering that this is the best year for gold since 1979. It's up more than 50%, something like 55% this year. That is incredible. So you can imagine that there'll be a little bit of pullback. However, if we do see those cuts, we might be heading into what would be a perfect environment for gold, so a 1970s style mix of reasonably high inflation and low rates. That would be a bit of a Goldilocks combination, no pun intended.
What about the physical markets?
Well, the physical market for gold remains there. We're seeing a lot of demand still in the consumer space. Obviously, that's not the main driver here, but it certainly helps. We continue to see central banks very interested. So the debasement trade is still there. You heard about that from Ruth. So all of those factors remain present. That should continue to really hold prices going into next year. But for a lot of us, this has been an unprecedented period. So a little bit hard to be specific on what happens next.
Kara, thank you so much. Bloomberg Managing Editor for Commodities and Energy in Asia, Kara Ferreira-Marquez. And a reminder about a big interview coming up today on Insight with Haslinda Amin, BOK Governor Ri Chang-yo, joining us exclusively with his views on South Korea's economic and policy outlook. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at how crypto assets are trading at the moment. We're seeing a little bit of a rebound, but it's pretty fragile. I mean, we did see Bitcoin, for example, gaining above 107,000 on the Monday session, just to fall back below 104,000. And in fact, it's remaining below its 200-day moving average, now near 110,000. All of this to do with that liquidation event that we saw last month, and that really weighing on sentiment, and perhaps also giving an indication that risk sentiment is pretty weak across assets. But let's discuss all of these digital assets. The 10th annual Singapore Fintech Festival underway right now. Let's head back to the event where Insight anchor Haslinda Amin is with our next guest. Has.
Well, Shery, the conversations here are around stablecoins, agentic commerce. Let's get perspective from Stephen Karpin, Regional President for Asia Pac at Visa. Stephen, good to have you with us. When we talk about stablecoins, it's actually a $2 trillion space. How are you looking at stablecoins? How are you looking to leverage that?
Well, stablecoins are quite a valuable method of exchange, of money, moving money around. And that $2 trillion, still the bulk sits into the crypto markets, where you're settling between cryptos of people are buying, holding, trading. But it's now moving into payments and money movement. And that 24/7 nature of what stablecoins are, the cross-border money movement, the ability to make payments in an efficient and secure way is something that's going to be quite a big change. It's going to make a big difference, and Visa has a network we can build on top of stablecoin rails to add a lot of value to leverage all of the different things we already have. So we're very committed to it.
In a way, it's still quite nascent.
Yes.
In 3 to 5 years down the road, how prominent a business would it be for you? How prominent a space would it be for Visa?
Well, it's going to be an and. It's not going to be a replacement, but it's certainly going to be an important part of it, particularly in the cross-border money movement side of things, where businesses are remitting to businesses money from around the world in this very efficient way, 24/7 settlement for consumers as well. But we're also seeing payment use cases where a buyer, maybe from Latin America, where currency is a little bit volatile, it's hard to get access to US dollars, is buying from a seller in Hong Kong on an e-commerce platform, and they're using stablecoin to settle. So that's starting to scale up, as well as people who hold their crypto balances and they want to use the value of that anywhere you can shop at Visa. And we've already got over 140 different Visa cards that can settle, off-ramp from crypto into the point of sale and acceptance. And that's making a big difference. So it will be an important part, but not everything.
The use case would be cross-border, also for trade, for countries which are trade dependent, like Singapore, like places like Taiwan, for instance.
Yes.
I'm just thinking out loud whether there is that appetite, that demand for other currency denominated stablecoins.
This is one of the big debates at the moment, and there's a circle of thought which makes a lot of sense in many ways, that economies that do a lot of trade, like Singapore, like Taiwan, and many others around the world, to have a stable coin in their own currency. There's another school of thought that says that it might all coalesce around the USD. But, I have the luxury of not being able to choose, but making sure the Visa network can support those that do scale with all the right trust. But I think we're going to find out, because it's happening. People are releasing others. You'll see what flows start making sense, and the things that end up gaining the traction will settle the case. But we're going to support all of those that have all the attributes of trust.
I want to touch on agentic commerce. This is a growing space,
yes.
Where bots don't just assist, they actually decide for you.
Yes.
How are you looking at that at Visa?
This is very exciting. It's one of the most transformational moments in commerce in history. And today, we're already seeing a huge amount of usage. I think so many people, there's 700 million active users per week on ChatGPT all around the world. They're getting great use out of that, but you can't make a payment yet with that. Now, we're changing that. We're introducing trusted payment credentials for agents that you or I or anyone could trust an agent with a Visa credential. We've tailored that environment. And on the merchant side, the merchant has to trust that that agent is a legitimate one that's going to do the right thing. So when you have those two things, you're about to see a massive transformation where we can hand over our preferences to then make a payment to get what we want, goods, services, anywhere around the world. It's a big moment.
How will it fundamentally change the payments ecosystem?
Well, we're building it on top of the Visa ecosystem, which for the last 60 years, we're the original fintech. We've always had trust, security, acceptance all around the world. And these are amazing ways of moving money and getting payments done. We're tailoring it now to admit trusted agents and for merchants to be able to receive agent payments in there. So really, on the Visa network, the core of it will not change, but we're tailoring it to enable agentic commerce run over it. And there's a core technology called tokenization that is enabling all of this that we've been working on for some time now.
Could something like agentic commerce level the playing field? We're in a region where you have 700 million SMEs.
Yes.
How are they leapfrogging? Are they able to adopt such technology?
Yes. Well, so the Visa network admits the smallest seller, the largest merchant in the world, and all of these other participants to play. And I feel very confident and compelled by inclusion of small merchants, small merchants now getting access to any customer around the world that they may want to serve via agentic commerce, because agents can find them. They can find them on the Visa network, they pay on the Visa network. So it should really give them access to more than they have available to them today. So that's a very exciting attribute of that too.
I guess the key thing is trust. You talk about how,
yes.
That is a key issue to adoption.
Yes.
How are you addressing that concern?
So there's technology to this tokenization layer that we have where you could provision your Visa credential, and we know that it's you provision that in there. It's got a couple of other pieces of data that come with it. One is your preferences that enable the agent to find, using an LLM model, your preferences more accurately, but also the instructions you have with it to make sure that the agent sits within the parameters that you set. So that's great on the buyer side. You go with confidence, it's going to find what you need. And then on the merchant side, we have a now suite of technology and process and protocol through the trusted agent protocol that we've designed for merchants to very easily be able to identify if this is a good agent, if this is one I want to admit to my environment to sell to. And so then you've got trust on both sides of the transaction. That is going to be a major unlock to unleash this for everyone who wants to use payments on the Visa network in agent world. Sorry.
So in terms of adoption, where does Asia sit in relation to, the US and Europe, for example?
So huge amount of adoption, like all around the world that we're seeing.
Playing catch up?
Well, playing catch up in the sense of we still haven't unleashed this into the full environment. We're still testing and so forth. But I am very confident, as Asia has proven in the past, that it leapfrogs, that it moves faster, that it solves problems quickly. And it's done through entrepreneurialism, it's through necessity, it's through governments facilitating that. So I expect Asia will be a leader in agentic commerce in the very soon period. And I'm talking months, not years here.
Fascinating. Stephen, thank you for popping by.
Thank you
Stephen
very much.
Karpin, Regional APAC President at Visa. Of course, Avril, we're coming to you live from the Singapore FinTech Festival. Many conversations coming right up.
Yeah, more to come, Has. Thanks so much. Has Linda Amin at the Singapore FinTech Fest. Now, speaking of commerce, take a look as well at ADRs of Singapore Sea Limited. They fell after posting quarterly profit that missed analysts' expectations. Net income for the third quarter came in at $375 million, while revenue topped estimates at $6 billion. Sea's biggest unit, Shopee, is facing fierce competition from global e-commerce challengers including TikTok Shop and Alibaba's Lazada. LVMH said to be gearing up to open major stores in China next month. Sources say 4 LVMH labels, including Louis Vuitton and Tiffany, are set to open multi-story stores in Beijing this December after years of development. They also say the conglomerate is in talks with a developer to open a new Christian Dior store in Shanghai. Elliott Investment Management is challenging Toyota Group's plan to take Toyota Industries private in a $31 billion deal. The activist hedge fund says the current offer of 16,300 yen per share is too low and lacks transparency. Elliott now holds nearly 5% of Toyota Industries, fueling expectations for a higher bid. We have more ahead on the Asia trade. This is Bloomberg.
We're seeing the downside pressure on SoftBank despite their net income beating estimates. We had seen them pretty their strong performance when it comes to their public portfolios, especially around Vision Fund. And also we heard that they will be offloading their Nvidia stake completely. That will net them around $5.83 billion, and they want to continue bankrolling some of those AI investments. So we're seeing right now the downside pressure across the board when it comes to those tech names. And take a look at SK Hynix as well, because the downside pressure on that high-flying stock has really led to the weakness on the Korean won as well. But let's talk a little bit about Nvidia's closest rival, AMD, as well. They expect revenue to grow around 35% annually over the next 5 years. That's fueled by soaring demand for data center chip. CEO Lisa Su, speaking at a company event, she said that data center revenue will increase by an average of 80% over that period. The company's partnerships with OpenAI and Oracle have bolstered confidence in its technology and its stock.
Shery, meantime, CoreWeave shares tumbled 16% in New York after the cloud and software provider cut its annual revenue forecast, citing a delay in fulfilling a major customer contract. Its CEO told us how the company is working to diversify its suppliers.
That is the question that we work on across our company continuously, right? And if you think about the messages that I was trying to communicate during the earnings call yesterday, I talked about the incredible impact of the effort that we've had to diversify our clients. We started the year with 85% of our revenue to a single client, and we are coming out of the year with our backlog which has reached all-time highs, where no specific client is more than 35% of it, and that is down from 50% even last quarter. So you're seeing tremendous progress on the contracting side. On the supply side, when you're looking at the powered shells, the data center providers, there is no single provider of data centers that represents in excess of 20% of our 2.9 gigawatts of power that we will be delivering to the market over the next 24 months. So you're seeing a real focus by our company to diversify on both sides of the ledger. The clients that we are delivering infrastructure to, as well as the suppliers that are delivering us the components that we need to be successful.
What can be done? Because we hear about power issues, we hear about how much people maybe need government to help speed up contracts, supply chain headaches. What is it in this particular data center issue that won't be replicated down the road? How are you making sure, or is it just something we are going to see time and time again, do you think?
Look, the way that we are handling this is we are doing several discrete things to ensure that we are future-proofing ourselves against these type of delays, right? So we have our team that has been built out over the past year that builds and delivers data center. And so we have a self-build organization to be able to deliver our own data centers. For instance, Kenilworth in New Jersey or Lancaster in Pennsylvania, where we are building from the ground up. Those skill sets, being able to deploy those individuals with those talents down to the data centers as they're being constructed by third parties, if they encounter problems where we can be useful, helpful, thinking through ways of solving and driving the process forward, is really important to being able to mitigate these type of delays.
CoreWeave CEO Michael Intrator speaking to Bloomberg Tech co-anchor Caroline Hyde there. And we continue to watch Japanese stocks. Of course, we have seen that support coming from a strong earnings season. Take a look at the topics against the Nikkei right now. We could see the topics bottoming versus the Nikkei. We are seeing some strong value rotation themes with some of those names reporting here in Japan beating estimates, despite the fact that today we do have that downside pressure on SoftBank. With that offloading of Nvidia shares, not to mention that they did beat on their net income, but broadly tech has been under pressure. Breadth in Japan has also been pretty good, despite, of course, what's happening with the SoftBank stocks. The topics, we're seeing 196 gainers versus 29 losers at the moment, Avril.
Right, so maybe investors shrug off what we're seeing in SoftBank today for the moment. Keep in mind also when you talk about these earnings, right, as you know, it's also been about how good some of the other Japanese corporates have been faring, including Sony and Toyota, some of the automakers, though, so far this earnings season, some troubles, I guess, including from Nissan when it comes to the loss that is expected. Now, for the moment, let's take a look at how futures are faring. And after what we saw, the tech selling, the Mag 7s, Nvidia leading the way down overnight, futures in Asia trade are flat. And this is how we're setting up for the China session. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.